Right, so we are looking at the FTSE here. I'm actually looking to get into a trade. So I'm looking at 672.69. So probably on your system it'll be 73.42, maybe, if you're looking to get in. 73.42 is the sell. I might just put an order in instead. That is what I'm going to do. So I'm going to put an order in here. Just a sell limit order. At 72.69 starts to kind of diminish a little bit, but 72.69. Now that's in, so that's going to be my trade area. Let me see, I've got to do it on another system as well. Just that little bit of weakness up there suggests that we might just fail at this point. I'm going to have a look what there is in a moment. Yeah, it looks like 73.41 might be the trade, which seems a bit low actually. Oh no, maybe not. Yeah, 73.41 is what we want for the cash, which gives us 5 pips-ish, doesn't it? Okay, so I've got those two in. So 73.41 is the order for the cash. Now we'll look for it to come down to this point here and break. Probably want to hold it for as long as we can. If it is to break to the downside. Now Jeff is probably still on old time, but we are actually on the new time here. Now there's only 2 in the room, and if you have anything to look at, let me know. There are a few trades we can have a look at after this, but it's going to take a little while. What may happen? Oh, let's have a quick look at the news and see what we got to shape our day. More Brexit things to discuss in a little while. Okay, so news-wise, building improvement. Now, I did see the Aussie. I'll have a look at the Aussie in a second. Building approvals month over month was a stonkingly good number, but I thought the Aussie was weakening, but maybe not. RBA statement, maybe that's the problem. So we'll read a little bit on that. Cash rate held still on put on hold. The 10-year bond auction. Wow. So that's the yield. Shrinking yield. See, this is the fascinating thing. This is the number we're really kind of interested in with the bond auctions. And that's just a shrinking yield. And that is usually indicative of stock markets which weaken as well, because it pushes the price of the bonds up. So that means that people are quite happy to go and buy the safety, which is interesting. Core durable goods. There's not a lot today that will drive the market either way, but it might just want to have a little pop back to the upside again. We are kind of getting in overbought territory here, but not that extreme. Looks like we may have one more day of upside. I have to say, the thing with it, I might have to take this out, you know. There's something about this market which suggests there could be another 50 pip pop to the upside. Yeah, I'm going to take the order out, actually, because I just see that there could be another 50 pip pop to the upside. And I'll show you that in a moment. Let's get rid of these orders. There we go. Oh, that's okay. This is what concerns me. Looking at this on the daily, what concerns me is this. Which is another 50 pips to the upside. I wouldn't want to trade it long, but that looks like the most obvious area to take the short. And then you couple that with this here, we start to get a bit of a target going on there, which kind of suggests that maybe we're a few days away. This, it looks like 5 days away could be, you know, what we could be looking at, which again suggests that maybe next week we start to look at that. Now, the one thing with this is that if the market comes down significantly enough from this level, actually I'd quite like to get a long on around about the 71.58. So around about 100 pips to the downside, I'd quite to get a long on here. Not willing to put the long on at this point, mainly because it doesn't look like a double top area. It could be, you know, it could start to drift to the downside. But what I'd like to see here is market come down to this point here, and then pop to the upside. It's looking less likely when I look at it like that, unless it's to do it today. But there's no real kind of significant catalyst today is the problem. So I'd quite like to see that come down and then go up here, you know, to try and take the long on there and see if we can keep the long all the way up, and see if there's anything on here. That does mean it drifts down from here, but I'm not that keen on the short in this area because it doesn't look to me like that's the area that the market truly would collapse from. It may, but I prefer, I think, to see it under these levels here before taking on the short. Starting to look like a broadening pattern, which is a pattern which is not particularly healthy. And when we look at a broadening pattern, we got one here. You see how the lines get wider and wider, and all that resulted in actual fact, it's probably there. All that resulted in was some significant downside. So I don't like broadening patterns. They're pretty tricky to read. So there's nothing seemingly on the horizon that would take the market to the downside. Now let's have a quick look at the RBA statement here. Oh, mate, you in? No. Thought I could hear Jeff. No, it's just me. Okay, so I see a couple of you in the room. I'm just having a quick look through. I'm just having a quick look through the RBA statement. We had further discussions in Parliament yesterday. Now, there is a potential trade on the FTSE here, but I'm just to kind of go over it again. The trade would be to the downside. Now, there is just a potential for this to create a little bit of resistance here and a triangle. Oops, get rid of that. You see the symmetrical triangle here. Really, what I'd like to see is the market probably push a little bit further up before looking for the longer term shorts. Let me just check the triangle's measured move. Yeah, it leads us pretty much into where I'd like to trade it. So I'm not going to look for the short until this point here. Now, there's no guarantee that the triangle will break to the upside or what the measured move will be. But I quite like that. What I'd really like is for the market to break down so that I can trade it long. This point I'll go short anyway because it looks pretty extreme to me. But at this particular level, it could. I mean, there's signs and signals here. When we look at the other charts here, it's failed here once before. You can just see it's failed here once before. This bar here is the red herring because it's not a high test bar. It's not a shooting star. It's just a bar. You know, it's kind of come up to the highs and failed at the highs, but it's not a high test. But sorry, it hasn't come up to the highs. It's come up to the closing highs, if you like, but not the high. So it's not a high test bar. So let's see if the market can just pop forward one more time here, because if it does, then I'll be quite happy to take on the short up here. If it fails here, I really want to get on the long. The real question is what's going to drive it? And I just had a look at the announcements today. We got some core durable goods orders and a few bits and pieces like that from the States, but nothing really that looks that appealing. So I think we have to sit on our hands on the open here until we get a clearer picture. As I say, this is an area that you could punt for a short. You could try the short, but I think my problem is that the upper area is only about 50 pips away, and you could get stopped out, and then it starts to fail. So I'd prefer really to see this upper level. Which is, as I say, is about 50 pips away. So I'd prefer to see his upper level and then go short, because at least then you got some room for a stop. With this, the stops, you know, they go above this level. It could pop up a little bit further, then start to fail. The other option is, and this is the thing about trading double tops. It's okay to trade a double top on an extreme, but otherwise you don't need to. You know, the other way to trade this is just to let the pattern here break down and then trade it. So two ways that you could go, or two ways I'll be looking at. One, take the short here, or two, take the short if it breaks and backtest this particular pattern, then look for the short. The short is only going to be probably down to, well, actually the 71.89 looks like an area. Let's bring in some other lines here. Let's see what the 71.89 suggests. Well, 71.80 is that monthly pivot. So probably looking at the monthly pivot as a potential area for a bounce. So we'll look at that instead. Now, of course, if you're going to if you are going to trade your stops in a different way, it is okay to go short here. That's just not what I'm going to do though. So, right then, let's come away from that and have a look at the RBA. Now, we've got no Jeff so far today because I think he's still on the old time zone. I've just seen he's just come on online, so we'll see. Okay, so let's have a look at the RBA statement and see what they had to say for themselves. Now, RBA. Right, board decided to leave the right. Let's see what we got. Outlook economy remains reasonable. Okay, although growth has slowed and downside risks have increased. Whenever I read these bank statements, they all say the same thing. It says the outlook for the global economy remains reasonable, although growth has slowed and downside risks have increased. Growth in international trade has declined and investment intentions has softened in a number of countries. In China, the authorities have taken steps to ease financing conditions, partly in response to lower growth in the economy. Globally, headline inflation rates have moved lower, which is not good for the central banks, following the earlier decline in oil prices. Although core inflation has picked up in a number of economies. In most advanced economies, unemployment rates are low and wages growth has picked up, which is a good sign. So, global financial conditions remain accommodative and have eased recently. Longer term bond yields have declined further, which is what I was discussing earlier on. Consistent with the subdued outlook for inflation and lower expectations for future policy rates in a number of advanced economies. Across a range of markets, risk premiums remain low. I'm not going to read this whole statement. Actually, it's not too much to do here. No, risk premium, equity markets have also risen and been supported by growth in corporate earnings. That's good. In Australia, longer-term bond yields have fallen to historically low levels, and short-term bank fund costs have moderated further. The Australian dollar has remained within its narrow range of recent times. While the terms of trade have increased over the past couple of years, they are expected to decline over time. Interesting. The Australian labour market remains strong. There has been significant increase in employment, and the unemployment rate is at 4.9%. The vacancy remains. So that's specifically to do with Australia. Continued improvement in the labour market is expected to see some further lift in wages growth over time, although this is still expected to be a gradual process. The GDP data, now this is a little bit more significant. The GDP data paint a softer picture of the economy due to the labour market data. GDP rose by just 0.2% in December quarter to be 2.3% higher over 2018. Growth in household consumption is being affected by the protracted period of weakness in real household disposable income and the adjustment in the housing market. The drought in parts of the country has also affected farm output. Oh, interesting. Offsetting these factors, high levels of spending on public infrastructure and an upswing in private investment are supporting the growth outlook. The adjustment in established housing market is continuing after the earlier large run-up in prices in some cities. Conditions remain soft and rent inflation remains low. Credit conditions for some borrowers have tightened a little further over the past year or so. At the same time, the demand for credit by investors in the housing market has slowed noticeably as the dynamics for the housing market have changed. Growth in credit extended to owner-occupiers has increased. Mortgage rates remain low, and there is strong competition for borrowers. So, for the progress in reducing employment, So they're still really leaving things on hold. It doesn't sound too bad, does it? I mean, that doesn't sound like a really bad report by any stretch. So I don't anticipate too much of if anything, it's going to be a drift to the downside rather than a significant move here. I think I would suspect. So I'm not looking for lower. I'd still like to see the market here, down here. It might be that it gets caught here around about the 97 area, but I'd love to see this monthly pivot tested. And then look to take that trade to the upside. Yeah. Right, what else? What else do we have here? Nothing else on the horizon. Let's just check the Aussie after reading all that stuff. Now the Aussie moves significantly lower against the CAD, and I suspect this is probably to do with Canada rather than Australia. Let's just quickly check what Paulo said yesterday from the Bank of Canada. Oh, actually, he's got a few things. He said He looks like he was pretty positive, actually. Trade disputes and a shift away from this globalization of production are slowing growth in global trade. Companies used to offshore their production. Now, more and more companies are reshoring or nearshoring. So, offshoring companies reduce costs by moving production to lower wage countries. Reshoring, automation, and the rise of wages in countries like China are now encouraging some firms to move production back home. That's interesting. Nearshoring. Some firms are locating production closer to their customers, and that's the issue, isn't it, for something like China, for a country like China, is that as they grow, they get to the point that they will be raising wages because they have to employ more people, and the only way to do that is by attracting more people, and it becomes less attractive to use it as a place to source goods. Trading services has been growing at a much faster pace than goods. Last year, many service sectors saw exports growing at near double-digit rates or faster, including financial services, tourism, telecom, computer and of information, and intellectual property, which again is interesting. I mean, that could affect the UK. We're meant to be the service sector economy, but other countries are kind of catching up. Growth in Canada's economy, which was based on trade in natural resources in early years, is now driven mainly by service industries. That's really interesting. Roughly 80% of Canadians are now employed in services. The statistics don't fully capture the contribution of services. Trading services is difficult to track and is probably underestimated. For example, many manufactured goods include a large service component that is buried in the price. By some estimates, as much as 30% of value of goods exports is actually created through services. Many companies today purchase back office computing services on the cloud. Previously, a company may have invested in the equipment and software and hired specialist staff to perform these functions. By purchasing cloud services, the company saves those expenses and boosts its productivity. This is clearly positive for the economy, yet our conventional statistics show a drop in investment and in trade. That is interesting. So the risk of trade wars, uncertainty affects investment. Uncertainty about global trading means that some business investment decisions have been scrapped, even if the uncertainty lifted completely tomorrow. These decisions could not be reversed, and some of the damage done over the past 2 years would remain. The cost of tariffs: when a country imposes tariffs on imports, those tariffs are paid by its own consumers and companies. Our research shows that such trade actions lower economic output while raising prices. Company facing tariffs on their exports will urge their governments to retaliate, and in the end, the global economy will be worse off. That's a bit of a dig, isn't it? That's a bit of a Donald Trump dig, by the sounds of it. So looking ahead, the Canadian economy has many advantages: a well-educated and diverse workforce that is growing through immigration, a portfolio of established trade agreements, and a solid economic base in natural resources. Canada can build on these strengths by remaining committed to global free trade and encouraging freer trade between provinces and territories. I quite like the Canadian economy because they do seem to be quite open for those trade deals, and they are obviously, running to do trade deals with Europe as well. They're just on a deal with the European Union, which is in the offing. So the Canadian economy actually looks pretty good. Right, what else? And he basically says recent economic data have been generally consistent with our expectations that the period of below potential growth will prove to be temporary. So that's a fairly positive. That's a fairly positive statement, isn't it? Now he says, promise in a challenging environment. Canada's economy can build on its traditional strengths by taking advantage of export opportunities in rapidly growing service sectors to overcome the current challenge environment. Bank of Canada Governor Stephen S. Poloz said yesterday. Trade and business investment slowed late last year across the global economy amid the US-led trade war. The governor said in a speech to whoever, so they contributed. Sorry, this contributed to weaker than expected economic growth last year. At the same time, the Canadian economy showed signs of continued momentum. The governor noted with a solid increase in jobs and income among faster growing service industries. So let's just see what the last bit says. In today's trade uncertain world, it is more important that we continue to make progress in promoting trade among our provinces and territories. Lowering interprovincial trade barriers could add 4.5 billion every year to Canada's potential growth in a time of slow economic growth. That is too good an opportunity to pass up. So let's just have a quick look at the last bit. In addition to the slowing trade and investment, Canada's oil sector is adjusting to lower prices, and its housing market is still adjusting to the combined impact of stricter mortgage guidelines and higher interest rates. That is why we said at our last interest rate announcement in March that the economic outlook continues to warrant a policy interest rate that is below the neutral range to help the economy work through this downshift in growth and keep inflation close to target. So effectively, they are able to support the economy. Now, from that, what we've just seen is the FTSE 100 just burst through the level up here. Now, this is only on an hourly chart. So the plan now for the FTSE is to leave this on and see if it will. I mean, there's every chance that we break and backtest and get through this point, but that is going to be pretty tight. So I'm not too keen on that. I'd like to see this just a bit higher. I'm looking for around about another 45 pips up, and then I'm going to look for the shorts. And I have drawn a level here for my short. Yeah, around about 40 pips, which is going to be some, I guess, DR. It looks like DR1 or 2. Let's just change the, no, that's DR1. WR2 and DR2. So somewhere around about here, I'd like to look for those shorts. Either way, whether it comes here and then just bounces down, there's probably still a pretty good 50 pip move to the downside. I mean, it might bash its head here, but I'd really like to see it up here just so I can trade that short. All right, anybody looking at anything else? What else we got here? So I don't think Canada or Australia have really. Neither has suggested huge issues. I'd say Australia were a little bit more bearish than Canada. Let's have a look at the Aussie. So the Aussie moved to the downside off the back of their statement. Never going to read that quick enough. The Canadian dollar is strengthened a little bit. Actually, no, this is the Canadian dollar, isn't it? This would have happened yesterday. So it's around about this sort of time here. Actually, it did strengthen. It found a base, drifted to the downside, and then strengthened. We are going to look at some other Aussie trades here. Aussie again weaker, so the Canadian trade against the Aussie looks pretty good there, doesn't it? So really, the Aussie, the Aussie CAD. Now we've had these two really emotive moves. Very difficult to trade both of these. But what you'd want to look for is what the fundamentals are suggesting, and the fundamentals both suggest downside. So let's see what that means on longer term time frames. So it looks to me like the Aussie could get a bounce point pretty soon. And it's going to be a question of where that bounce comes into, doesn't it? The daily's probably not going to provide an opportunity because it's just a bit too strong. This move down is a bit too strong. However, it does look like this level looks pretty good. So 0.94693 I would be looking for. Yeah, let's call it 0.9470. Would be an area that I'd want to look for some downside, somewhere around about there. Yeah, so the break of this area. So if this pops up here, let's have a look to see if there's anything going on. Now this head and shoulders pattern may well have played out, so let's just check that as well. It's somewhere around there, isn't it? Something like that. Looks like the range of the head and shoulders. Let's get rid of that. Yeah, the head and shoulders is pretty much played out. So it takes us down to this yellow area. But that doesn't mean that I wouldn't want to trade that, looking at this currency. So look for a 94.70 on the Aussie CAD. May not come back there, but I think that looks pretty good. You got one currency reporting bullish, giving a bullish report. The other one giving a fairly bearish report there. Aussie Swiss. The Swissy doesn't really give us the same opportunity. It's going to need to pull back in. Now, if this is a proxy for the stock market, that isn't particularly in agreement. Aussie Kiwi was the other one that I know one of our guys is in this Aussie Kiwi for a short. I don't know if he would have got taken out on that bar. That may well have dragged some stops out, mightn't it? There is a technical level here. All you're really waiting for with this Aussie Kiwi now is to give you an opportunity. It could be one day of showing that this is going to hold, and then looking to trade this tomorrow. The problem with this is that they're so closely correlated that there may not be that opportunity to trade that short. And as I say, I'd probably want to see one more day. I'm just checking this FTSE for levels that I'd like to go short at. I've got a couple here. Slightly problematic because we got this one here. I'm going to have to run a fib on this as well. This one here is just a little bit lower. That's 10 pips up. Let's put that line in as well. And make sure it is tight. It's somewhere around here. I think splitting the difference is the way forward. Of course, the big issue will be is if this breaks through and holds, because that will suggest that that could be as far as it goes. Let's just have a quick look at the rest of the week. There's nothing. Core durable goods orders may make a difference here. I mean, it is a red folder number. This may be the way that people can get into the Aussie. Retail sales might pop it forward. What have we had recently? Well, they're actually forecasting for a little bit higher here. So that could pop the Aussie back up again to give a shorting opportunity. 30-year bond auction, not hugely interested in that. And then non-farm. I mean, they're obviously going for a huge beat. That was a crazy low number. Look at the huge drop here. You know, the numbers go along. And we've had the same thing here. I'm sure that was readjusted, but I don't think it was readjusted in the end. But it was a crazy low number last time out. So they're looking for a beat, but to go from 20k to 175k, that seems fairly extreme. So maybe somewhere in between those two numbers could just put a bit of pressure on the United States.
Oh,
hey, buddy.
Hello. I forgot all about the time change. I'm so sorry,
mate. Don't worry about it. Don't worry about it. It's going to take a little while, probably, just to get used to it. But no big deal. No big deal. We've I think quite a few people forgot about it, to be honest.
Oh, okay.
Yeah.
Won't tomorrow. I'll be good tomorrow.
Yeah, no problem. No problem. Well, there's
What's
probably
happening?
well, there's a few things on your side of the world. We can talk about Brexit in a moment, but a few things on your side of the world which I think are worth
Yes,
noting.
certainly.
The FTSE is continuing to ease to the upside. I am looking for shorts, and actually, I put a short order in the market just along this point here, looking for a symmetrical triangle. So when the price was down here, I put a short order on this line here, but as just before the market opened up, I noticed on the daily chart that there are some actually other levels that look a lot more attractive for the short. So I just managed to get that order off the table, and it's proved to be quite a fortunate cancellation because it has continued to move to the upside. I'm still looking at my slight issue is, where's going to be the line? There's 3 lines here. I'm going to have to put a fib on, but I don't think it's going to tell me too much. But there's 3 lines here. We got this line from, let me draw these again. We got this line from this pattern, which is a broadening pattern, which kind of leads us up around about another, looks like about another 25, 30 pips to the upside. We have got, which will give us this broadening pattern. We have got this level here, which may well be a kind of neckline of a head and shoulders. When we kind of look down there. So that level might be in actual fact, that looks like it is probably pretty much done. That looks maybe a shade shallow, but I'm not too sure on that one. So the only other line I've got is the line up here. This one to me is the most obvious, because you can't really have too much confusion with that. So I'm looking at 3 potential lines with this, but what I do also see is that taking this one away, these 2 lines may well converge depending on when it happens. So if it takes a couple of days, maybe another week to get to continue to the upside, then I think this area here becomes a lot more obvious. If it pops up a little bit early, it's going to be a little bit trickier to know what to do there. But I guess what I will probably do is, if the market comes to this point, I'm going to need to wait for signs and signals. If it pops up to this point, I'm just going to trade it short because I think that line is far too strong to hold initially. So we'll see. The only issue with that is that that's going to be a pretty strong bull market to the upside, and for it to reverse 100% in a day is unlikely. So in actual fact, maybe a bit of patience might be wise here. I just don't see much of a catalyst. We'll talk about Brexit, as I say, in a moment, but let's get to the Australian bank statement. I see the Aussie is tanking today. I've just read
It was
both.
a really dovey statement. Yeah.
Yes, it was, wasn't it? And it was
really
interesting because the Aussie CAD specifically was, I think, or is an interesting market, because we had statements from both banks, and the Canadian statement was it wasn't hawkish necessarily, but it was very positive, talking about the service sector and how the Canadian economy is no longer reliant on the commodity based aspect anymore. So it's more kind of pushing towards services, and looks as if
Say that again. What did he say?
the Canadian economy, according to the governor, is no longer so reliant on commodities.
Really?
Yeah, so he seems to think 80% of the economy now is more service based, and just made some very interesting points about the service sector being able to make specific cuts, because now they're going to cloud-based systems. They can use the cloud-based systems rather than having to buy in lots of new equipment, and it also means that they can do much more cross-country business rather than having to have specific office space. So it seems that the service sector is quite a lucrative area for them. And he also said that a lot of the services that are an aspect of the commodity-based market are hidden. So the service sector seems to be a fairly decent market for them, and and yeah, he seems to be quite happy with the way that the Canadian economy is shaping up. So I don't think, looking at the two economies, that you would have any doubts in which one that you'd be trading towards. And even with the Canadian, the Aussie CAD moving to the downside here.
Yeah, I was waiting to get into it too.
Yeah, I mean, even with that, it's an interesting. Were you looking to get in short or long?
Yeah. Yep.
Which?
You're short.
Oh, sure. Yeah. I mean, I think, but this is the thing with this coming down here. You are looking for a bounce, aren't you? But I quite like. I don't know which level you've picked off, but I quite like the 94.70 ish kind of area as a
Yeah, if you
potential
have a
trade
look at
short.
the 4-hour chart, you'll see what area I'm interested in. Yeah, you're pretty much bang on. It's kind of up a little bit higher.
Yeah.
You can see the break of the neckline there and
Yeah.
the retest of.
Yes. Yeah. So we're looking for shorts in this. Whether there's an opportunity, I don't know. I don't think this is tradable though, mate. I mean, that's pretty
No,
vicious,
not
isn't
now,
it?
no.
I
No.
mean, even before, how would you trade this? Maybe getting in here, but
I'll
that
show
would have
you my
been.
chart and what I was looking for. But
Oh, let's have a look. Yeah, let's have a look at your chart.
it's actually there for me, and it was kind of there on Friday, but the gap was a bit of an issue on yesterday. Okay, I'll show you my chart.
Yeah, let's have a look.
I had a decent old look at this yesterday, and my analysis was, I don't know if you can see my screen yet, but my analysis was that we had a nice left shoulder, we had a nice head, we had a nice right shoulder, we had a nice neckline coming through here. We'd broken the neckline, we'd broken the weekly pivot, and we'd retested both. There's probably an entry there, you know. That's kind of where I was at with it, but I didn't like what had happened here with the gap in the market. It hates me. I hate it, and never the twain shall meet. And then we had another gap here. Oh, sorry, the gap was here, not here. This gap here. So that spooked me. But this morning I was looking for exactly what happened, but too quick. I was looking for the daily pivot test and then getting short off that. But you can't trade that candle, of course. So there was a way in, and there it was, and completely missed. Mind you, the reward to risk on that was pretty poor. So, you know, I'm not kicking myself that I didn't take the trade, because I don't think it was a good trade to take, trading straight into the monthly pivot. But you can see now, and this is what I was looking at this morning, where we had a nice place to bounce off the monthly pivot back to the daily pivot. This is exactly how I saw it happening, but impossible to trade.
Yeah.
So SH1T happens there, mate, I'm afraid.
Yeah.
The only thing that's possible now, I suppose, if I'm still of a bearish nature, is, and there's no reason not to be, as you've described, is to wait for the monthly pivot retest and see if there's something there that can get us in. But that's pretty much it, I'm afraid.
Yeah. Do you know what? I was I was just looking ahead actually earlier on, and I see tomorrow we do have some retail sales numbers from Australia. So if they come in to be fairly decent, then maybe that could provide some sort of bounce, which would.
Well, we've also got the budget tonight, you know.
Oh, okay.
The budget's out in an hour, I think, or about an hour. Normally it's about 7:30 our time.
Does that often cause some movement in the Aussie?
Yeah, look, it depends. It depends on what the government stance is. You know, if they're looking to be fiscally positive or fiscally benefactors, if you like. And it appears that's probably going to be the case, because guess what? We've got an election coming up in a month's time or something.
Yeah.
So they're likely to be dishing out funds left, right, and centre. It depends on how they allocate those, where they go, all those sorts of things, as to what the market might think of it. You know, may think nothing, of course, but it will depend a lot on where they throw those dollars. Pork barreling, it's called, at the end of the day. So yeah, look, that could happen. That was my wish this morning. Actually, exactly what's happened to the Aussie. was that, well, one of two things I wanted to happen: to be driven up here and then look for the short, or to be driven down here and look for the long. And as I said yesterday, I'm still bullish this at the moment. I think if we smash through here and continue to or close down here on a 4-hour chart, then we've probably got issues. But whilst ever we're at this level, I can still see the long. So I don't have an issue. I think this is exactly what I asked for this morning. And if I don't trade it long here, then something's a bit weird.
Yeah.
And my analysis on the cross again was that we had a rally and a potential reversal here off these levels. A weird looking inverted head and shoulders, but we got a bullish engulfing bar here, which drove us up to the monthly pivot. Nice tweezer top here. That should have, in my humble opinion, driven us down to support. But it really didn't do that. The most obvious support being the bottom of the range, of course. Didn't quite make it. And, I said at the time, well, if that's not going to happen, then there's likely something the opposite of that is going to happen. And that would be to break through resistance and find the next level of resistance. So I'm still there.
Yeah.
Whether I can find that way in or not's another story. But yeah, I'm still of the opinion that there's a long to be had here, and that's what I'll be seeking. And the most obvious point, of course, is to play a false break off this trade line. So back above here, retest the confluence area of monthly pivot and trend line. Happy days. Away we go. If that's we're open, aren't we? This is the second candle of the day, so
yeah.
I'll be looking at that from now on the 30-minute charts. And it sounds crazy, I know, given the absolute dovishness of that statement. And it's as dovish as I've read from the RBA.
Yeah,
absolutely. It's really not good. And the other side of that is, the Aussie seems to be, I don't know, trailblazing this interest rate cut thing that everyone now seems to be saying, yes, that's probably the next direction of interest rates.
Yeah.
So, maybe the market's expected that anyway. I think the market had already priced in 2 interest rate cuts for the Aussie. I think it was even this year that they would price 2 interest rate cuts. So this may not be, as bad as it sounds, if you like. And it sounds bad, I've got to say that. And certainly the market's thinking that. The only weird part about this, to me, today was that it actually rallied before it crashed. And I couldn't see from the statement why that would be the case. Because from the outset, he was saying, this is not good, this is not good, this is not good. But why it rallied, I've got no idea. Maybe you can't even say it took stops out, because it didn't. Well, maybe took these ones out, but it certainly didn't take these out. So the head and shoulders there worked again. Break with the gap retest, and away she went. But how do you trade that?
Yeah, I don't think that was tradable. I know Lloyd was in the Aussie Kiwi short, but he if he didn't use a stop, which he may not have done, then he would have been okay. But otherwise, he may have been fortunate enough. But he was right on direction. But as you say, he can be right on direction, and it'd be so vicious that that it's impossible to get in. And that's the thing. I think that there's certain news that you can trade with a normal stop, and certain ones you can't. And when there's an announcement or a rate statement of any sort, you can't really trade those with a stop in a normal place. But the issue with that is, if you don't put a stop in a decent enough place, then you can get absolutely obliterated because it goes in the opposite direction. You don't know what they're going to say. That's the problem, isn't it? And I think avoiding these statements is really the only when it comes down to trading opportunities, is the only really approach, because for every one you are right on, there's another 3 that you're wrong on, and they can really take your account to the cleaners. So there's just no point. But I don't know whether, because even if you've done the trade that you were discussing before about the trading outside the ranges, you would have probably been in on both sides of this, wouldn't you, because of it?
Well, I didn't have a look at it, but yeah, let's have a look at that. We've got. It's a bit early in the week, of course, to have a defined range. Tuesday's not a great day to trade the week range break, because the week's range break, where's Monday? Monday's here. I mean, you would have cleaned up, but there's your entry long would have been probably around about there somewhere, and that's your stop for the short, and your entry short would have been probably around there somewhere, and that's your stop for your long. So it would have worked out nicely.
Right.
Absolutely would have.
Okay. All right.
Risk of only about 30 pips. Your reward so far is beyond 1-to-1. So yeah, it would have worked.
Okay.
No drama.
Okay.
I didn't even look at that, mate.
No.
And I had this. Well, I think I said yesterday that the only way this statement could be would be dovish, and therefore it should drive the Aussie short. But and that's exactly what's happened so far. But now I need it to do exactly what I said again, and come back into this area and then give me the long. So yeah, I'm pretty keen on this.
Okay.
If it does set up.
The only other so the two other ones I think we need to talk about is the dollar yen, because obviously like to look at the yen to see how that's shaping up.
That's also behaving beautifully for me. Exactly what I'm asking for.
Yeah, I see. I think this one's a really interesting one, because I would be looking for the short in dollar yen. It hasn't.
I'm certainly looking for the short.
It hasn't provided, but we got this little bull flag on the 4 hour, which, you know, this is the thing about these flags, is that, like everything else, we have to ascertain the context of it, and this bull flag really appears at the top end of a trend, so it's not a great place to try and get into the bull flag. But you know, so far the formation of it is absolutely classic. You know, we haven't got too many bars. You wouldn't want any more bars, really, because the flag starts to look more like a channel than a flag. But you know, with just four bars, maybe one more, you could just about justify, would be okay. Between 3 to 5 is ideal for a bull flag, and the flag is nice and tight. So with this,
it is classic.
You know, it's one of those as well that if you are looking at the bull flag, then realistically you can look at it in either direction. You know, it's a bull flag, so obviously it's the assumption is that you're looking for the long. But if the bull flag breaks down, that can be a really strong down signal, because of the nature of the pattern itself. So I am looking at this, but the other, I think, key aspect with the dollar yen is where it sits. I mean, it's just you know, we're on these levels here, very, very close, if not right on top of that touch up there. There are these levels down here as well, which is a little bit tricky to draw, to know exactly where that is, but it looks like it's somewhere along there, which just about puts us above that price action. But as I say, it's a little bit tricky to draw, so it does depend on where that sits. I suspect it is probably there, but that is a great confluence area of some downside. Now, if I bring in,
it sure is,
also the pivots here, let's just see what they are. So the price action's above the pivots, which is a bit of a shame. But what this is telling me is that if this holds for another day, this daily pivot may well pop into a different area. It probably won't go above price, which is what you'd want, isn't it? It may go above price, and that would probably be the trigger for some downside if the daily pivot pops above price. So it's bashing its head against another level of resistance. But the reason that the dollar yen, I think, is important is because, you know, as I was analysing the FTSE, which one thing I haven't done, I was just looking to see, you know, where's the hint of global weakness, because I'm not seeing it right now, and the FTSE, because of that, does continue to move to the upside. I was just going to check this as well, the fibs. Now the fibs suggest that 43. So the fib on this is kind of probably giving me the same area as this trend line here. So there might well be a trade at 43. So that's probably the point that I'll be looking at the shorts. I probably won't look before that, which is another 50 or so pips to the upside, and then I'll be all over the short. I probably won't care about a setup. I'll just look for the short. But before that, I think the longs are probably still on.
There's a I don't know if you've got it. I'm on the 4-hour chart. There's a nice little trend line that's holding price. Well, so is the horizontal level, obviously, as well.
Are we talking about the dollar yen?
And I'm talking about FTSE.
Oh, the FTSE, yeah.
Yep, that chart where you've just had the trend line break as well, and now it's as well as the horizontal level. So there is a confluence there holding up price.
Yeah.
At this point in time, so I could see a short from me even if we got to hold here on the 4-hour, then came underneath after a little bit of consolidation, maybe even below the daily pivot, which is around about 73.25.30.
Okay, yeah. So you're on cash, aren't you? 73. Here we go.
Yep.
Yeah. Under here.
Yep. So if we got back below that trend line, which comes from your extreme high there, yeah. And the daily pivot, retest the trend line, I think that would be a very good place for me to short the market as well.
Yeah. Yeah, I mean, that does look like a good place, doesn't it? If price gets below that, it does look like a shorting opportunity. The issue is that this market is in a bull trend, and you know the shorts are going to become a lot more difficult, which is why I'm trying to look for the extreme points, because at that point I would suspect a significant retracement, but it doesn't necessarily mean that we do actually change trend, because this, as I say, you know, when I look at this on a daily chart, it has been very, very strong. The move to the upside has been very, very strong, and we try again to break a level, but it's looking pretty solid, isn't it?
That chart's telling you a very strong picture, yes.
Yeah.
Very much. Yes. My dollar yen analysis is very clear, mate. I've actually got a very clear picture of dollar yen and what happens or what needs to happen for me to trade it. I'll put it that way.
Okay,
Not
let's have a look.
going to happen, but you remember last week we got into this long.
Yep.
On the strength of, you know, it was dollar yen. On the strength of the false break of not only the trend line, but also the monthly pivot. So we got below the monthly pivot, below the trend line, a little bit of consolidation, not as much as I like, but enough. And then the bull bar, the retest, not only of, you know, the trend line, but the monthly pivot, the weekly pivot. This was very clear entry for me. Unfortunately, I couldn't hang on to it. My trailing stop got hit. But it's just as clear to me now what needs to happen for me to trade this. And for me to trade it short, I need this level to break, this trend line to break. Find the resistance in the horizontal area, which is probably here. It's around there somewhere. As you can see, it's been strong. It's been strong all the way through here.
Yeah.
So we're there again. That's where the downtrend looked to have started, and really did look to have started, but it hasn't. And now we're going to have a crack at these highs again, I believe. Now, if that's the case, and we come back off these highs, get back underneath this area, find a confluence to trade a retest from, then the shorts are definitely on the cards for me. At this point in time, we've still got lower high, lower low, lower high, lower low at this point. So that's definitely on the cards for me. If we get to here and don't take out this high, get underneath, retest, bang, that's where I'll be at. So that's very, very clear picture to me on the daily chart.
Yeah.
To trade it right now is probably not even a consideration, because we're right at the resistance, well, the first resistance level, the one that I want to break and go to here. And as you say, there's a bull flag right here, right now, and we can see that the potential here is to go to this level, but to trade through that level is really not a great idea for me. And now you can see very clearly on this 4-hour chart that we have reversed. And here we go again. So we're looking for the next reversal, if you like. And on dollar yen, that's been pretty much the case for how long now? Since April 2017. So 2 years we've been trapped in here. And I don't think that's going to change anytime soon. I think we'll just continue to go to support and resistance and bounce off them. If I now look at this chart, I've got a little more doubt about it actually going short. So it could continue to go long because we've now got a higher high. We've now got a higher low. Why aren't we going to put in another higher high? Who's to say? And that's not me. So I'm not predicting what's going to happen here. What I am saying is if it does happen, then I'll be looking to get all over it. But this could easily just go from here and take out these highs. And if it does, I hope I get an invitation into that one as well. But at this point in time, I'm waiting for the false break to go short. We'll see.
Yeah, yeah. Well, the other two currencies we need to discuss, obviously, is the pound after yesterday's Brexit votes again.
Of course, there were no again.
Yeah, another 4 no's, and the 4 that were on the table there was a customs union which I think lost by about 3 votes. There was a 3-vote swing or something like that. The second referendum was a 6-vote swing. So if seven more MPs had voted for the second referendum, that would have got through, and the Common Market 2.0, which is effectively the Norway deal, which I was predicting would get through. That one lost by, I think, something like a 10-vote swing. So they were all very, very close, but there was no majority for any of them. And there was one other one, which was, I think, to scrap Brexit altogether if there was no deal. And that one lost by, I think, 15-vote swing. So as I say, that maybe slightly more, maybe 25-vote swing. So as I say, that they were all very close, but nothing really garnered the support that it needed. And due to that, we are back with an impasse in Parliament, which is very worrying. Today, the cabinet will be talking again to figure out whether they're going to bring back Theresa May's deal with some sort of change to it. On Wednesday, we have potentially more indicative votes. They've certainly booked Parliament for the indicative vote debate again, to see if they can convince more MPs. You know, if each option can convince a few more MPs to come over. And then obviously on the 12th of May, we are due to leave. So we've only got another 9 days, I think. No, 8 days left in the EU. Quite interesting reports. I think Guy Verhofstadt has said that the no-deal Brexit becomes ever more inevitable. So that is really the default setting right now, and we should look
we're
at
grinding there inexorably, it seems.
Yes, we do seem to be, and it's incredibly worrying, because when it comes down to it, really the people's vote. You know, I've got thoughts on this for 2 ways. One is that the default position of no deal should really be the position, because that's what people voted for. They voted to leave the EU. They didn't really kind of have all these different options that were, you know, ways to leave the EU. They just voted to leave. So that's the first thing. Yeah, that's the first thing. But the second thing with that is that if that's the case, what a waste of 2 years! What a waste of money and a waste of time, because that should have just been the position from day one. And I think by now things would have been a lot better. But because they flapped around and tried to sort themselves out a deal that would be, you know, for the unicorns effectively, they have wasted all this, you know, this huge period of time. And due to that, if that is Parliament's position, the only real way that that surely this can now change is with those the people's vote. If they can't decide, then they've got to throw it back to the people. I don't think it's right that that they continue to flap about and effectively drag us towards a no deal by default. As I say, that should have been the position, and that should have been the position from day one. But because they've wasted all this time, they really leave us with no option but to have no deal by accident. And for that reason, the people's vote really should be on the table. So hopefully they
should
see
hang
sense.
their heads in shame. The whole bloody lot of them. I mean, it's absolutely farcical.
They really should, mate. You know, it's awful, really, what they're doing in Parliament, and you're right. They should be hanging their head in shame, and really the whole lot of them should be sacked. So let's have a look at the pound and see what that has done to the pound. And I find this pound fascinating. Just how resilient it is with all this going on. Just goes to show that there is confidence in the market for a deal to be done. You know, nobody has an appetite for no deal, but you have to say that's really all there is. You know, that's all that's on offer. But this is the line, and this line is it got held last Friday, when another deal failed, and it hasn't touched the line. You know, it didn't touch the line yesterday, but we'll probably get dragged back down towards that particular point. But it's fairly fairly placid, really. You know, it has been so far this morning. It's been fairly placid. So considering you know, all the concern that's out there, and the likelihood that we get this no deal right now, I'm surprised the pound is holding up. I suspect by the end of this week, if we don't get something through, I think next week or even on Friday, people do start to panic a little bit, and we do start to see some pound weakness off the back of that.
Yeah, I've kind of decided to leave it alone right now.
Yeah, yeah.
I can't see a clear picture. I can still see the bull trends there.
Yeah.
But gee whiz, you know, it's really tough.
Yeah, it's pretty concerning, isn't it? It's fairly concerning market right now, but it's held up pretty well against the dollar, also holding up against the euro as well.
Yeah, and the yen to a certain degree. Yeah,
pretty much the same thing. It's holding up against the yen, still in a downtrend. You know, with the yen, sorry, not the yen, the euro is still in a downtrend against the pound. And I suspect if the deal of any sort gets done, then we're going to see some significant pound strength. And at that point, then we can probably get back to something of trying to read the charts rather than trying to read the sentiment in Parliament. But yeah, it's a pretty awful scenario. So you're leaving this one alone. So the last currency that we should get to before we wrap up, actually, because it has been on for an hour and a half, but
some of us have been going for ages, mate.
yeah, I've been on air.
Sorry about that.
That's okay. So the euro. Now, this is the other one that I wanted to talk to you about, because I think this is incredibly concerning where the euro's sitting. I mean, obviously this is a buy zone. My question really for you is, would you have the appetite to buy it here?
Well, I have tightened my stops on both short positions, so I'm agreeing with you now.
Okay.
We're now come to the point where really, and there's no such thing, but it really has to bounce here, in my humble opinion.
Yeah.
Otherwise, it's gone. I mean, it's gone if it doesn't.
Well, let's have a look. Well, that's
yeah. If you have a look at the weekly chart, it is gone if it doesn't bounce here.
This is it's kind of concerning, isn't it? Yeah, this is the weekly chart.
It's probably got a few pips left, but gee whiz, we're at 112 now, so you know the whole figure is going to hold it up a bit, you would think.
Yeah.
But if that goes, you know, wow, where do we end up?
Really? Well, I guess, I mean, the next level it would potentially bounce at is down there, but you got to say this is more of a bounce point in an uptrend than a bounce point in a downtrend, and it looks like it could go all the way down to 1050.
Yeah, I'm thinking 109.60-ish is the level I've got, round about there somewhere. That's where I'll look to take some more profit.
Yeah. Yeah,
But,
no, I
you
see
know,
that. Yeah, I see that. That does look like a bounce point. A bounce point that doesn't look like a reversal area, I have to say. And you know, that's why I would look all the way down here for the next potential reversal area. But it does look concerning, doesn't it? I mean, great that you're in the short.
yeah, look, I reluctantly move my stops. But you know, the Fibbo levels there, the horizontal levels there. I think you've got to expect a bounce here. You really do.
I think that. Do you know what the issue with the euro is? That I don't know what's going to drag it out of the mire. There doesn't seem to be particularly positive reporting out of the eurozone, and that's the concerning aspect, isn't it?
It is very concerning. I mean, I'm super glad I am short right now because it is a very, very sad-looking chart that I'm looking
Yeah,
at.
yeah.
If it gets through this level, and that's the key. This pretty much where we are right now is the key. 112. You know.
Yeah.
And if it goes, I think 109.50 is not out of the question at all. But stranger things have happened, and we're in a situation with Brexit where anything can happen.
Yes,
Still,
absolutely.
If I wasn't in this trade, I think I would very much like to stay on the sidelines on this one as well.
Yeah.
Until it unravels.
So,
as unravels must. Yeah.
So, I mean, is there anything else that you wanted to add, mate? Any other currencies that you want to look at? I think we've probably done. I mean, we only had half an hour to be fair, so it's but I think we've done a lot.
Nothing's really changed. I'm still a euro bear. Because I'm in these trades, it helps that, of course, that position. But I absolutely see there has to be a bounce here. And if it's a big one, I want to just lock in as much profit as I can, and I've done that. So if it does bounce, I'll still be looking short, but I need now to wait to get back into it, to a post-Brexit situation, I think. The Aussie I'm still bullish on, and today I'm looking for that to trade long, and dollar yen. I want to see what happens at these trend lines. I'll be looking for a false break, but if it doesn't come, I can definitely see some upside still there.
Yeah.
So the picture's pretty clear as to what I need to look for. I wish it was as clear as to what is definitely going to happen, but the picture's clear as to what I need to look for. So that's a good thing.
Yeah, absolutely, mate. Okay. All right, buddy. Well, I think we'll wrap it up there. So tomorrow we will be in. Just to kind of reiterate, we're starting earlier. So this is the new time now for we run 7:35 until 9 o'clock. On the UK session is 7:35 until 9 o'clock AM. And that would be for Singapore. That is going to be 2:35 until 4 o'clock. So we're a little bit earlier because the clocks have changed. But if we start later, we miss the UK Open. So this is why we have to change times. It's not down to us. It is down to the market. We prefer, well, I'd prefer an extra hour in bed, even though I don't really get it actually. But yeah. So tomorrow we will be back at 2:35. Sing.
And I promise I'll be there.
And Jeff will be here. Jeff will be here. All right. Thanks, buddy. Well, thanks very much, everyone, for listening. And hope you got something out of the show. And happy trading for the rest of the day. We'll be back same trade time, same trade channel tomorrow. And have a good rest of evening for you as well, buddy.
Cheers, mate. You too. Have a good one, everyone. Bye for now.